Bitcoin has tumbled back to 26k upon the news that the SEC has delayed the ETF rulings for BlackRock Capital and 4 other major investment firms. Will this be the trigger for Bitcoin correcting lower? Can the bulls reclaim strength and push the prices higher? And how are the macro charts looking? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be going over the short-term charts, the macro charts, and the daily charts from a technical and structural perspective. Going over what the next move for Bitcoin will likely be, how the charts are shaping up, and what caused this aggressive correction. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. You can find us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything in between to keep you in the loop of cryptocurrency, with Bitcoin, and of course with the economic data. If you're interested in joining our VIP channel, we have over 600 members. We post trading signals with exact entries, exact targets, exact stop losses, such as this amazing Bitcoin short we did right over here at the top, resulting in a pretty hefty profit for us in the VIP. You'll get access to that VIP group, and you'll get access to our multitude of VIP group chats, our general chat, our trading chart and education chat, our news chat, our trading setup chat, our help chat, and our video chat. If you're interested in joining all of those, contact me in the pinned comments in the free channel for more information. Let's dive right into the video. Now, first and foremost, guys, if you have been paying attention to the channel and you've been following and watching the videos, you would know we anticipated this move to the T. We said a break above 26,300 will result in a strong move into our next upper resistance, where we will then reject and we will likely see a full-blown retracement, which we discussed in the prior video. We saw that retracement complete, we reached our target, we have dropped back into this horizontal consolidation range, and in today's video, we're discussing what next. We're not only discussing what next, but we're talking about how the charts are shaping up on the daily, on the weekly, on the monthly, and we'll go over absolutely everything. By the end of today's video, you should have a very well-rounded and deep understanding of what is happening and what to expect. So we'll start on the market data. How is the market data looking? 24-hour volume is up 41.24%, sitting at 84 billion. Following that, liquidations have taken a steep surge to 130 million, sitting up 169% in the positive for the 24-hour liquidations. We can see liquidations in the last 24 hours primarily coming from those long positions, as late longs got squeezed on the way down. Moving from there, we can take a look at our historical volatility. We can see on our volatility index, the 30-day volatility index is back on the rise, and the 60-day volatility index has peaked up just a little bit. Again, this is quite indicative of volatility, and again, is representing of increased volume, increased velocity, and we saw that kind of metastasize on the chart over here with this huge surge in price action. Moving on from there, guys, we can go ahead and take a look at the overall data in relation to that monthly return. So we'll take a look at this currently. We actually ended August at negative 11.01%. We are now moving into September. If you've been watching our videos, you would know September historically is got the greatest probability in terms of it being red or in terms of it being green. In fact, if we go back and look at all of the red months and all the green months, there's about a 75.6% chance that September is going to be red. If we take all of the negative months and all of the positive months, add them together and divide by 13, which is the total amount of years, the average drawdown for September is 5.43%. So we have a 75.6% chance, based on historical data, that September will be red. And if we do see a red September, the most likely drawdown percentage is going to be 5.43%. We'll come back to that fact later into today's video and discuss it in a little bit more detail. Moving on there, we have the DXY. The DXY has broken below that short-term support, but has bounced back upwards. Again, we saw that PCE data come out, which resulted in the DXY moving upwards ever so slightly. we have seen this downtrend break, right? We've been in this downtrend for the last 8 to 10 months. We broke out of the downtrend. We are now officially in an overall uptrend. The uptrend is expected to continue until we see two things. Number one, a retest of an upper level of resistance where we expect the uptrend to potentially reject from, or if it does break through, this will be very, very bearish for the markets, okay? Or number two, we clear these local lows again and head towards our dotted trend line. The dotted trend line, once more, is going to be an area of dynamic support for the DXY, so we could potentially see a bounce on this level before a continuation back upwards. No matter which way we spin it, the DXY is looking relatively bullish here, but will begin to look even more bullish if these local high points are starting to clear out. Moving on to the S&P 500 is potentially creating a local high over here. This could be a lower high. Again, we do expect the S&P to retrace fully towards this uptrending diagonal support / horizontal support confluence zone, provided we are in a rising channel formation. We do not expect the strength to come back or the bulls to really take control until we clear over this local high resistance. Again, if we broke over this resistance over here at 4,600, the bulls will gain some strength and could potentially push the prices back to 4,800. Until then, it does look rejecting, it does look bearish, it does look like we're continuing downwards. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump into Bitcoin, starting on the smaller time frame and breaking it up to the high time frame charts. So first and foremost, let's go over what has happened in the last few days, and that can kind of set the narrative and tone for when we talk about what is likely to occur next. So we saw an aggressive break toward the upside a few days ago as a result of the SEC losing that court battle against Grayscale, which enabled them now to submit an application for a spot Bitcoin ETF if they please to do so. Upon that news event, Bitcoin saw an aggressive rally toward the top side, breaking through our trigger point at 26.3K. We said in the channel a few days ago, if we break 26.3K, that is going to be the bullish trigger that will result in a continuation upwards into our high time frame resistance. We saw that move, we completed that move perfectly, and since then, we have seen an aggressive pullback. Bitcoin started pulling back from that range, and then all of a sudden, we got the news that the SEC has now delayed the ruling for the ETF, spot Bitcoin ETF, for 5 different companies, including BlackRock, which resulted in aggressive correction toward the downside. Thankfully, in VIP, we saw this coming, we traded this, and we got the profit. Even if you've been watching the channel, if you're not in VIP, you would have known from our last video, we told you guys, resistance is resistance until it is not. Although the price pushed up aggressively on the smaller time frame, it did not push high enough to clear any significant weekly levels. In fact, nothing at all changed, right? If we look at the higher time frame, we zoom out, nothing changed. The price action simply came up and retested the daily 50 EMA and the 28K level of resistance. This entire move upwards was nothing to write home about. In fact, now we have seen that move fully correct. So what is the next move for Bitcoin? We have to come back and discuss this exact range where we ended before, because we do know while the top side has deviated and played out, the bottom side of support is still absolutely relevant. And before we get into that, I do want to say support is support until it is not, just like resistance is resistance until it is not. And when we see massive corrections towards resistance, the probabilities of rejections increase, just as when we see massive rejections towards support, the probabilities of bounces increase. The question is, if a bounce occurs, will that be a strong enough reaction to flip the overall trend? My answer to that is no. So short term, I do expect a small bounce to occur while we remain above 25.8k. I am taking my profits on my short positions. I am moving onto the sideline / moving into low risk scalp longs to try catch any bounce that occurs from this level. If 25.8k is lost, okay? If 25.8k is lost, the downtrend will continue for Bitcoin. And I do think if we zoom out to a higher time frame, which we will in just a moment, the most likely scenario is that we do continue down. If we take a look at 25.8k, what we can see is 25.8k is not only a base of support, which has been for the last 15 days, it also represents a volume trigger according to the VRPV, meaning a loss of this level results in, historically, the volume dropping off. We have very, very little volume in terms of the VRPV. When we start dropping below 25.8k, it starts to diminish as we move downwards. If we go to a small time frame, of course, it's a visible range. It is pretty much non-apparent, but you'll notice that the VRPV does suggest volume drops off below this level. Where does it start to pick up again? Well, if you look at the charts, it starts to pick up again at 25.2 to 24.4. If we zoom out, you'll see 24.4, and that level again is going to be that high time frame level of support. The 25.2 to 24.4k level is not only a horizontal support that's lasted, 400 days, as if that's something significant to talk about, which it definitely is. 400 days is massive, okay? We take a look, a 400-day long support. Not only does it represent that, but it also represents two other major things. It represents the shifting point between the weekly downtrend, which we are currently in, right? We're in a weekly downtrend sub 28k, and the monthly downtrend, which will start if we lose 24.4. That's number two. But number three, it also represents the midline of the Gaussian channel on the weekly chart. Where is the Gaussian channel midline? 24.4. So 3 points of confidence on that significant level of support. So if we lose 25.8, that is when we expect this downtrend to continue lower. Until then, this level, this horizontal range that we are retesting, is currently support. If you see a short-term bounce from here, do not be like, whoa, I can't believe that happened. It is expected. We'll go ahead and talk about it in a second. If we zoom out to the 4-hour chart, we can see our CVD is bearish. Okay, our CVD is bearish. Our CVD has lost the range low resistance on which we broke out from. This is a signal that the bears, okay, the total bearish volume has exceeded the bullish volume more so than the area of which we broke out from. This is a sign of excessive weakness. If we look at momentum, momentum is broken below this uptrending diagonal trend line which we had, which represents a negative momentum shift. And open interest is of course falling with price action falling, signaling a strong downtrend. So the overall trend is down. The likelihood of continuation on the higher time frame is relatively high. But if we go down to a very small time frame, it's like a 5-minute chart, we can see we are starting to see some bearish exhaustion. And bearish exhaustion, at support is not something to be confused about. It is actually relatively normal. And we can see this once more. If we take a look at the 50 EMA and the price action, we had expansion, we had compression, we had expansion, we have compression. This is a very common pattern. Expansion, compression, okay? Usually comes with lots of 4. This signifies that the volatility, the bearish volatility is drying up, okay? If we take a look at momentum, we have a clear bullish divergence, Okay, what does that represent? It means momentum is starting to flip bullish. If we take a look at the CVD has gapped upwards. What does that represent? It represents volume is starting to flip back in control of the bulls in comparison to the bears. What does all of this mean? It means we have bearish exhaustion at support, which is likely to result in a push upward. How high can a push upward go? We go back to those exactly the same levels we've been discussing over the last few weeks. The same levels of resistance become levels of resistance. 26.3k is still going to be a level of resistance for the bears, for the bulls, sorry. If we break above here, we then expect a move back into this range, this 27k range. Breaking above 27k will be very, very challenging considering the high time frame levels of resistance and the metrics on the higher time frame. The best case scenario right now I can see the short-term price action is a move up to 27k before rejection and continuation back down. That is the best move I can see for the short-term price action. The most likely move for the short-term is, of course, a small bounce up to this level before rejection. And if we zoom out to the higher time frame, if we want to see that continuation down, we do need to lose this support. Support is support until it is not. Lock that in your head, remember it, and trade based on it. Let's go ahead and talk about the higher time frame. So the high time frame daily charts, again, looking bearish. It is looking bearish, guys. It is not looking fantastic. As I said, we've retested that 28k level of resistance. The 28k level of resistance is the trigger point between a uptrend and a downtrend. Okay, it is literally that trigger point. It's the differentiating point. It's the point at which the trend flips. We've retested and rejected from that point, and therefore we have validated and confirm the fact we are very much in this downtrend, back in this horizontal consolidation before the next move does develop. If we take a look at the high time frame structural levels, we can see we do have a head and shoulder pattern. A head and shoulder pattern, again, does not need to result in higher or lower shoulders. It just means the ratio between the distance of the peak of the head needs to be larger than the ratio between the peak of the shoulder and the neckline. We can see this line over here is larger than this line. Therefore, this is a valid head and shoulder pattern, as the head has a larger distance between the neckline and the peak, as the shoulders do with the necklines and the peaks. Perfect. We have a head and shoulder pattern. Where does a head and shoulder pattern target? If we take the measured move towards that breakdown target, apply it to the structural breakdown, we can see the measured move targets the exact point. And guys, this is crazy how the charts show this sometimes. The exact point of support according to the VRPV peak. Where does that tell us it's going? $19,000. Now, are we going to see $19,000? If we look at the charts objectively right now, according to where we are in terms of the high time frame trend, the probability is relatively low. It's a very low probability. However, if we lose 24.4k, that is when we enter this weekly downtrend into a monthly downtrend, and all of a sudden, 19k doesn't become so unrealistic. So right now, I would say it's quite an ambitious target. I'd say it's actually an overly bearish target, because we do have to respect support as support, okay? And we can't expect support to be broken until it is, and therefore to say 19k is going to happen is a bit of a stretch. It's a possibility, but it's a stretch. It's an unlikely scenario. But if 24.4k gets lost, the probability of that significantly increases, so watch out for that trigger point. Moving on to the monthly and weekly charts, how are we looking from a technical level? Let's go to the daily, actually. Technically, on the daily chart, we're looking quite grim, right? We saw a breakdown of that Gaussian, of that midline of the bull market support band. Again, we saw the breakdown of bull market support band. We've come up, we've retested it again, potential sign of resistance. We're also seeing, furthermore, a retest and rejection from the 50 EMA. Again, another sign of pretty strong weakness. These are always going to be acting as trigger points. The bull market support band, the Gaussian channel, the 50 EMA, these high time frame trigger points, they do not act as resistances, okay? They act as points on the chart where the strength between bulls and bears will flip, okay? They represent strength. They represent volatility. They represent volume. They represent, more importantly, the strength of price action in relevance to prior price action. So as we can see over here, while we remain underneath the 50, this area of price action is showing significant weakness in comparison to this area of price action. If we have weakness in trend, we're likely to continue downwards. And that's kind of what this is saying. If we look at the bull market support band, it's kind of saying the same thing. While we remain underneath the bull market support band, we're technically in a bearish trend. The probability for continuation downward is higher than if a continuation upward occur. For a continuation upward to occur, we would need to break back through the Gaussian channel, the bull market support band, to then result in a higher probability for a continuation upwards. Again, these aren't things we're trading off. We're not saying, oh, we're broken the midline, we're broken the bull market support band, time to short, time to long, but they're good indications of the probabilities of continuations in either direction on the macro charts. Let's go over to the Gaussian channel, which is my favorite one. Look at the Gaussian channel, guys. We've seen a significant shift in strength on the Gaussian channel. We've seen a shift from bullish strength above to weakness. The break from the top side down into the channel represents a shift from a uptrend to a downtrend, okay? We see a shift from a uptrend over here into a downtrend as we break into the Gaussian channel. A break into the Gaussian channel represents a shift from an uptrend into a downtrend. A break from the top side of the Gaussian channel into the Gaussian channel represents a shift from an uptrend into a downtrend. We've seen exactly the same thing. While we break from the top side down, we have an increased probability to move toward the midline. The midline is an area of support we usually do find. A loss of the midline then increases the probability of a direct break through the Gaussian channel on this chart. If we happen to break the midline, which is 24.4K, which we've discussed multiple times in this video, we will see a loss of the lower band of the Gaussian channel. Where will that take us? It takes us to 19,000. Now, there it is, 19,000. That number pops up again. Remember, over here, where does that take us? 19,000. The head and shoulder pattern is targeting 19,000. The Gaussian channel is telling us if we break 24.4K, we likely push through the Gaussian channel. Where do we end up? 19,000. Furthermore, if we go back to this chart over here, if we lose 24.4K, what does that signify? It signifies a monthly downtrend starts and the probability of 19,000 significantly increases. So do you see how the dominoes are lining up? Do you see how the charts are all suggesting the same thing from a structural perspective, from a technical perspective? All these different perspectives are lining up and targeting the same thing when we break these trigger points. And that is how we do analysis on this channel. Furthermore, guys, I do want to go ahead and point out the 4-year cycle is intact still, provided we remain above the prior low. The 4-year cycle is intact provided we remain above the prior low. I do think it's a very low chance we create a new low. I don't think I want to be talking about that too much yet. It's a topic for another day. But for now, we've gone over the short term, we've gone over a higher time frame, we've gone over the biases, we've told you what to expect for the bulls, we've told you what to expect for the bears. I think a quick summary is in order. Right now, the weekly trend is down. Short term has seen a strong rejection towards support. Support on the short term is support until it is not. Expect a short term bounce. If we zoom out, the high time frame is still looking weak. From a daily, from a 4-hourly, from a weekly perspective, our technical indicators, our metrics, and of course our structural analysis are all suggesting the price could potentially go lower. Before we start talking about targets of 30,000, 32,000 higher again, we need to reclaim $28,000. If we reclaim $28,000, the bulls will start to look a lot healthier. The price could definitely then continue back upwards. I am by no means bearish. I am by no means bullish. I am neutral. I trade the trends. I trade the charts. My biases flip on the daily basis based on what the charts are telling me. Do not sit there and categorize yourself as a bull. Do not sit there and categorize yourself as a bear. Doing so, taking sides will only blind you to 50% of the possibilities. Look how many people started saying, holy hell, we're going to the moon, the bulls are back, blah, 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 all over Twitter. The bulls are back, bears are getting wrecked, whatever, when we started to see us move. Only for them to FOMO in at the top when we were shorting when we took our rejections over here, okay? The same thing happens over and over again. News events develop on the chart well before the news is released to the public. The metrics, the volume, the momentum, the pressure between buyers and bulls are a direct reflection of the probabilities of directional moves in either direction, okay? The news event is then pushed into the public to push the public in the direction of which the price was already developing to go in the first place. It is led to trap retail. We saw the trap again set for retail over here, and we saw that later news come out and nuke retail to the floor, okay? You have to understand, news events are not to be trading if you are retail investors. Do not trade news events. It is the lowest probability of return. It is the lowest probability of success. It is essentially akin to gambling. Focus on the metrics, the data, the momentum, the volume, the buying and selling pressure, the buying and selling deltas, everything you can be looking at to determine where the price is going. That is what you need to focus on as a retail trader. Thank you for watching. I hope you have a great day. See you guys on the next one on Sunday. On Sunday, we're going to zoom out. Provided nothing major happens on the short term, we'll zoom out and talk about the monthly charts. We'll zoom out and talk about the bull market. We'll talk about the bear market. We'll talk about the 4-year cycle. We'll talk about how high can Bitcoin go, how low can Bitcoin go, etc., etc. Thanks for watching. See you guys in the next one. Cheers.